Welcome to Accounting 11, Unit Number 1. The objectives for Unit Number 1 are as follows. When you finish this unit, students will be able to demonstrate the necessary skills to determine the financial position of a business. Define assets, liabilities, and owner's equity. Classify items as assets, liabilities, or owner's equity. They'll be able to calculate owner's equity. They'll be able to prepare a balance sheet, and they'll be able to use correct recording procedures. First of all, we need to talk about financial position. Anna Szabo is an assistant manager of a local bank branch. She authorizes loans to individuals and businesses. Laura Chari, 1 year of experience working as a landscaper. She wants to start her own business as a landscaping company. She needs $10,000 to start the business. Anna Szabo will decide if Laura will get the loan. She needs to look at Laura's financial position in order to make that decision. So let's take a look at all the things that Laura owns. Here's a list of items owned by Laura Chari. She has cash worth $4,000. She has government bonds of $5,000. She has clothing worth $3,000. She has furniture of $15,000, equipment of $10,000, and an automobile that she thinks is worth $20,000. The total of all the items owned by Laura is $57,000. Now, Anna will take a look at what Laura owes to creditors. Creditors are people that we owe money to. Could be people, could be businesses. Laura has $2,000 in credit card debt. She also has a bank loan of $10,000. The total of all the debts that are owed to creditors by Laura is $12,000. Anna now calculates Laura's financial position. The way you calculate personal financial position is by taking the total value of the items owned, in this case $57,000, and you subtract the total that is owed to creditors, which in this example is $12,000. So $57,000 minus $12,000 equals $45,000. This becomes the personal net worth. Let's take a look at some of the accounting terminology. Assets. Assets are items of value owned by a business or a person. What are liabilities? Liabilities are debts of a person or a business. And personal equity, or in this case personal net worth, is a person's net worth. The balance sheet equation is a very important equation, and we'll be using it throughout the whole course. It is an equation that displays the financial position of a person or a business. It is assets equals liabilities plus owner's equity, or A equals L plus OE. Here are some numbers that you can take a look at in order to get used to the equation. In the first example, we have $57,000 of assets, and we have liabilities of $12,000. Gives us a remaining owner's equity of $45,000. Now, because this is an equation, the left side must always equal the right side. So, the left side are the assets, $57,000. The right side are the liabilities plus the owner's equity. So $12,000 plus $45,000 gives us $57,000. And because it's an equation, both sides are equal. Let's take a look at some calculations using this equation and see if we can get some practice in determining what is missing. Remember, assets are things owned, and equities are claims against the assets. Here's an example. 10,000 equals 10,000. Assets equals liabilities plus owner's equity. Now, If we have assets of $10,000 and liabilities of $6,000, it stands to reason that the owner's equity is 10,000 minus 6,000, which will give us 4,000. So in this case, the owner's equity, or the owner's claim against the asset, is $4,000. Here are some more examples. In this example, on the left side we have 10,000, on the right side we only have 4,000 for the liabilities. So the owner's equity must be $6,000. Example 2. We have $25,000 for the assets. The liabilities are $7,000. Therefore, the owner's equity must be $18,000. Example C. We have $30,000 for the assets. We have $10,000 for the owner's equity. That means the liabilities must be $20,000. Example D. We have $18,000 for the assets. We have $12,000 of owner's equity. That tells us that we have to have $6,000 for the liabilities. Example E. We have $100,000 for assets, $40,000 for liabilities. Therefore, the owner's equity must be $60,000. 100,000 minus 40,000 will give us 60,000. Remember, assets equals liabilities plus owner's equity, or A equals L plus OE. Now let's return to our example. We want to talk about a personal balance sheet. A personal balance sheet is the financial position as determined by the assets and liabilities and owner's equity. On this personal balance sheet, you can see on the left-hand side, we list all of the assets. In our example with Laura, we have all those assets that we talked about earlier. At the bottom, we have to put the total. After the list of assets, we have to put a single line to indicate that adding or subtracting is occurring. And then when we have the total at the bottom, the $57,000, it must be double underlined. On the right-hand side, we have both the liabilities and the personal equity. The liabilities are listed, and under the bottom liability, we have a single line, which tells us that addition is about to occur. And then we have the total liabilities of $12,000. Then we have another category for her personal equity. And under here, we list the person's name, Al Chari, and then we put net worth. And as determined by the equation, this is $45,000. Then at the very bottom, we have to add both the liabilities and the personal equity. So we have to write a title called Total Liabilities and Personal Equity, and that gives us $57,000. Notice, underneath the $45,000, there is a single line, because we also have to add the liabilities plus the personal equity. So the single line tells us that addition is about to occur, $12,000 plus $45,000, and then at the bottom, the $57,000 represents the total of those two, and it is underlined. Also, please notice that the total assets is on the same line as total liabilities and personal equity. So in some cases, if we have a big gap because there are more items in the assets or more items in liabilities and personal equity, we still have to match up the total asset total with the total liabilities and personal equity total. The balance sheet. The definition of a balance sheet is a financial statement that lists assets, liabilities, and owner's equity at a specific date. Your assignment is to complete questions 1 to 5 on page 12 of your textbook, and then complete exercises 1 to 3 on page 12 of your textbook. You can use your workbook to find exercises 1 to 3, and they will have space provided to answer those questions.